Nicole Flax, a principal in PwC's Tax Controversy and Regulatory Services practice, and this is Tax Insights in brief. On August 15th, the IRS announced the opening of the application period for the 2025 Compliance Assurance Process, or CAP program. The CAP program is a voluntary real-time audit program where companies and the IRS agree to work transparently and cooperatively with the goal of the company receiving certainty when they file their tax return. Unlike traditional post-file audits that don't start until several years after a return is filed, companies in CAP are generally able to stay more current in their open years and controversies. This application period will run from September 4th until October 31st. The IRS provided detailed information on revisions to the CAP program for 2025, and there are 4 major changes that were announced. First, the IRS announced expanding the program to include domestic and foreign privately held C corporations. Previously, the program was open only to public companies with GAAP-audited financial statements. And while not included in this round of changes, note that the IRS has asked for public comment about whether there would be interest in allowing partnerships into the CAP program for the future. Second, the IRS provided an exception to the limit on the number of open years for CAP taxpayers for Inflation Reduction Act, or IRA, issues. And so while this allows more flexibility, many companies are anxious for certainty on these issues, so this is mixed news for some companies in the program. Third, the IRS is now requiring a new form to increase its gathering related to cross-border activities. The IRS released a draft of this form last year, which is now required to be submitted. And this is in addition to other existing forms that address issues such as research credit, transfer pricing, material issues of the company, and tax control framework. And then finally, the IRS made the Bridge Plus phase of the CAP program permanent. The IRS decides which low-risk companies are in this phase of the CAP program, and they are required to provide extensive documentation, but they don't engage in the same ongoing active relationship with an exam team throughout the year. For those companies that apply, the IRS will inform the applicants whether they have been accepted in the program by February of 2025. So as the IRS is increasing post-file audits, some companies may want to consider whether the CAP program could be the right fit for them. Companies that are interested in applying for 2025 or for future cycles should take action to understand the information that would be necessary to apply. For more details, please read this insight. Thank you for watching. This has been PwC's Tax Insights in Brief.